Hey guys, good evening, everybody. As we're waiting for people to join in, I'll just jump in, say hello, greet you all, and thank you so much for jumping in on such a cold night. Um, would love to know where you guys are from. If you want to use the chat bar just to make sure that you guys can actually hear me and see me well. If you can put in the chat bar hello or yes, or where you're from in New Zealand, that would be really cool. And then we can actually check that things are actually working. That'd be great. So feel free to put, oh, there we go. Yeah, you can hear me from Christchurch. Awesome. How are you guys doing in Christchurch? I saw some snowy pictures, I believe. Hello, Niraja from Lower Hutt. Hope Christchurch is good. Not too bad at the moment. That's good. It's raining at the moment in Kapiti. For those that don't know, I'm in Kapiti. Why can I? We'll kick off shortly. There's people jumping in. And if you wanted to share the link to the Zoom with your friends or someone that didn't have the chance to register online officially, feel free to send them the link as well. That's not a problem at all. I always believe knowledge is power. Now, one more question for those that are here. Do you guys know me or you just come across the link randomly? I would love to know if you knew me from before or is it the first time seeing me, just so I can gauge where we're sitting tonight.
I got the link from Facebook.
Oh, nice.
Yeah.
Hello. That's awesome. Facebook works, I guess. That's good. All right. We'll just wait for a few more minutes for other people to join in, and then I will jump into my little presentation for you guys tonight. Um, don't know why my other camera is not turning on, but oh well. Oh, thank you, Marina. Appreciate that. Okay. But you guys can hear me well and see me well, right? Beautiful. Don't know why my camera is not working. Just give me 1 second, please. Better camera. It's working now. Awesome. All right. What we'll do is we'll just kick off and then whoever joins in will just join in. Now, couple of house rules. Obviously, if you can keep yourself on mute, camera on or off, entirely up to you. Sometimes it's nice if I'm talking and I see people, that's great. If not, that's entirely up to you. I understand it's 8 o'clock at night and some of you may be in your pajamas. But keep yourself on mute. And then if you do have any questions, feel free to put them in the chat box. And then I will get to them as I'm delivering the presentation. Or if they're not relevant to that particular slide, I will probably get to them at the end. It shouldn't take more than half an hour tonight, half an hour to an hour maybe, but we shouldn't take forever. So, and this is your platform to learn. Um, I'm the expert, but you're the ones that need to learn of what you want to do. So I am here for you tonight, and let's kick off. I'll just share my screen, and hopefully the ones that are coming, you guys can talk to them in the chat bar as well. Okay, cool. Awesome. Can you guys see my screen? Can you see what I'm sharing? Yep, beautiful. Thank you, Niraja. You're going to be my person today. why? Because I can see really well. I can't see anyone else. So I'm going to rely on you. Thank you so much. Awesome. Well, what I did is I put together this little presentation, but it's actually part of my guide that I give away for free as well. So after the presentation, if you want a copy of this guide, let me know and we can flick it through to you as well. Now, for those that, oops, that went too fast. For those that don't know who I am, my name is Zibuniso, and with a name like mine, you cannot hide in New Zealand. For those that are interested, you can actually go on zibuniso.com, and there's a few stories about who I am. But I've arrived in New Zealand over 23 years ago. I've made New Zealand home. I've got kids. And through this, the last 15 years, I worked in the bank, and then I worked for myself as well under Mike Pero Mortgages franchise. So for me, getting people into home is a personal journey because I feel like I've come to New Zealand as an immigrant, and I believe everyone deserves to have a home that they can call their own. So yeah, so for me, I love what I do, and especially working with first-time buyers is a big passion of mine. And I'm based here in Kapiti in Waikanae, but I work with people from different parts of New Zealand, really, and mostly Wellington. Now, a quick disclaimer, this is not intended as a financial advice. So all information here is used for general information only. So if you do want specific advice for your situation, please feel free to reach out to me afterwards, or any other advisors that you might be working to, but this is just more of a general information for you tonight. Now, we're going to look through 7 steps here tonight. We're going to look into what's happening in the New Zealand market right now. We're going to talk about what actually matters when you have to prepare to buy a house. We're going to talk about different mortgage options, lending criteria, what are the lenders are actually looking for. We're going to navigate the purchasing process, what happens, because a lot of people get a pre-approval and then they go, and then what? So we're going to look into that. We're going to look at, if you are putting an offer, what sort of conditions you should be putting, and then some common challenges and maybe helpful tips, and then what happens at the settlement day. And then I will open up the floor for your questions and answers. Now, in terms of the New Zealand property market, for those that don't know, today Reserve Bank announced OCR, which is official cash rate in New Zealand, and that's gone up. So when that goes up, it means the interest rates go up as well. And with that, often 2 things may happen, is either people, they might struggle to continue pay for their mortgages because they might have bought when the rates were really low at a very high price. So they may not be able to continue to pay for their mortgage. For instance, this is just an example. So they might be selling their properties. So there might be more properties coming onto the market. And again, that might reduce the appetite for buying properties, and that makes the property prices go down sometimes. So as a first-time buyer, that might be a good time for you to get in because the property prices may be going down. The interest rates may be going up, but not as harshly as we had last year. Last year, they went really crazy, really fast. This year, they're sort of a little bit mellow. So really important to understand where you're sitting right now in the market. Now, a lot of people come to me, especially Wellington region. We've got lots of apartments in Wellington. Unfortunately, a lot of those apartments come with things that you really need to be aware of. So body corp, maintenance, what's coming up. So usually the preferred options that people go for is standalone houses that you see at the top there. Now with the standalone houses, it helps people to have, to make decisions on their property by themselves. Nobody else can say to you what you can do with your property. You can do whatever you want. If you want to renovate the roof, if you want to renovate the kitchen, the bathroom, you are in charge of that house. The next option is usually townhouses. And again, they built a lot of them. I know Lower Hutt region, Upper Hutt region, Christchurch, you guys have a lot of those townhouses. It provides affordability, probably not much space in terms of outdoors, but usually they're very nicely laid out inside for a couple or a small family to live. Apartments, not my preferred option in New Zealand. And then new builds. A lot of people come to me and they want to buy new builds. And for new builds, the conditions are really awesome. So let's say if you're looking to buy a new build, you can actually get in with as little as 5% deposit for your first home. Versus apartment, even if it's your first home for an apartment, the bank may still require you to have a bigger deposit. And they usually don't go up in value as fast as normal houses or townhouses. So apartments usually a bit of a forgotten child in the property market. Now, so as we just discussed, the OCR went up, and some people think that it might also cause rising housing prices. Interesting point again, certain areas of New Zealand are still rising, like Queenstown, for instance, still booming, versus Wellington, 29% below the prices that were a couple of years ago. Auckland is also below 15%. However, there are still areas of Wellington or areas of Auckland or areas of Christchurch that are still doing really, really well. So never look at the region as a whole. If you know what you're interested in, if you know exact area you want to be in, look only around that area for price comparison. You can't compare two different areas because you're going to get just completely skewed mind and the prices there. Now, I am dealing with a lot with investors as well, and a lot of investors are coming back to the market for flipping properties because, again, really good time to buy properties at a cheaper price. They renovate them and then they on-sell them for a little bit of a profit. So this is who you will be competing with if you're looking as a first-home buyer to buy a home for yourself. Now, let's talk about the financial preparation and budgeting. A lot of people come to me and they go, oh, will the bank look in my bank statements, what I've been doing for the last 3 months? Yes, we do look into that. But at the same time, we'll look at how really bad you've been. If you just had a few holidays or if you had Christmas or, now we're sort of coming out of other public holidays, it's okay if it's a one-off. But if you're constantly in overdraft, if you're not saving, if you're not showing yourself as a person that can be good with money, then yes, there will be more questions for you than usually. So what I normally say to my clients is try to put money aside into your savings. KiwiSaver is awesome if you've got that. Again, with KiwiSaver, try to put more than 3.5% because you can't really touch that money. But KiwiSaver can be withdrawn for your first home, and we'll talk about KiwiSaver a little bit later. So really, really important to be good with money leading up to house purchase. So you can show the bank that you're good. But if you had a few slips here and there, as I mentioned before, it's okay. We can deal with that. Now, let's talk about how you can get in with as little as possible, because a lot of first-time buyers have been either migrants that just got the residency, so they may not have big deposit, or people that have been working super hard and a lot of money goes towards rent. So it's really, really hard to save. So there are fantastic opportunities here. With the Kayanga Ora, you can actually get in with as little as 5% deposit. Now, there are T's and C's with that. If you're by yourself, the income is capped at 90,000. If you in a couple or a person with 2 dependents, then the income is capped at 150,000. So if you're earning more than that, you won't qualify for that. But there is another loophole to get in with 5% deposit. I'm not going to mention tonight, but there is another loophole to get in. So let's say if you're looking at a house that's 600,000, all you need really to save is 30,000. And that should be doable if you followed my advice in the previous slide where you're going to be disciplined with savings. You should be able to save that within 6 months, 6 to 12 months. And then with KiwiSaver, now be very, very careful. You have to be enrolled in KiwiSaver for at least 3 years in order to use it. A lot of people don't realize that. And if you don't use your KiwiSaver the first time around, it's really pretty much impossible to use it the second time around. So you only have one chance with KiwiSaver for your first home. Then it's going to stay there until you retire. So until you're 65. Again, talk to your advisor, and this is where the power advisor comes in, because sometimes clients come to me and I go, look, if you wait another few months, you actually might be eligible to get your KiwiSaver out. So it really depends on your situation. Now, in terms of buying a house, a lot of people don't realize, especially if you've been renting for a while, there is cost to being a homeowner. And I really like to give my clients always the worst case scenario versus the best case scenario, give them the rose tinted glasses, and then they buy a house and they go, oh my God, I didn't realize about these things. Now, first thing that you really have to allocate money for is obviously your mortgage repayments. And I see a lot of people paying, 50 to 60% of their income is going towards mortgage repayments. Then you have insurance and rates. For those that are in Wellington region, insurance is a little bit more expensive because of, we had so many disasters in the last wee while, right? We had the floodings, we had the landslips, all sorts. Same for Auckland. Really make sure that you can get insurance on the house before you decide to buy. And it's a really good exercise as well to see if the house had any issues before. So then you know, should you buy that or not? And rates, absolutely compulsory. This is council rates, government rates. You have to pay them. And you can't negotiate them, and they usually go up every year. So you have to be prepared for that as well. And then there is maintenance and utilities. So I usually recommend putting some money aside into a savings account that you're not going to touch. If you're buying a second-hand property, as we call them, not brand new, there will be things that will require some sort of maintenance. So just watch out for that. Now, let's talk about pre-approvals and what sort of mortgage options are there. I hope you guys have a piece of paper and a pen, and I hope I'm not going too fast. So if I'm going too fast, I can't even see the message box. No, that's all good. We're good there. Awesome. So, types of mortgages. Now, as a first home buyer, you will most likely get a mortgage that's principal and interest. Now, principal and interest, what it means is that whatever you borrowed, you will also pay interest on it. And then as your principal loan reduces, you pay less and less interest as the time goes by. Then there is a reducing type of mortgage, very uncommon in New Zealand. I thought I'll just put it in there, but honestly, don't even pay attention to it. Very, very, very uncommon in New Zealand. What it does is you pay more upfront with interest, and then you pay less over time. Suits people that might be GPs earning 300K a year each, but want to have a family in 5 years' time. So they might want to pay off all the interest first and then attack the principal over time. To be honest, I'm very against that product because I believe that principal and interest works way better than the reducing mortgage. The next one that usually people go for is offset mortgages and offset mortgages and revolving credits. Works like a giant credit card. You put the money in there, helps you to reduce the interest. Again, as a first-home buyer, usually I do not recommend that product. If you just manage to buy a house with 10% deposit, you don't have much savings left. So this product will not be a good idea for you. And if you're at the barbecue and someone tells you about this offset product or revolving product, go back to your advisor and actually speak with your advisor, because we'll be the best ones to know whether it's good for you or not. What works for one person may not work for another. And then there is reverse mortgages that we usually help clients that are elderly, that have their own home, and they just need a bit of money for different things. But we're not going to dive into that because you guys are first-time buyers here tonight. Right. This is super, super important. Not many advisors are talking about it. I don't think I've come across many advisors that actually openly talk about this in an open forum. But as I worked in a bank, this is what we judge people on, all right? Character. Now, character, as I mentioned to you before, it looks into your credit history. It looks into your spending habits. It looks into your employment stability and your financial behavior. So what it means is that when we put the application in front of the bank, we are painting the picture what sort of person you are. If you've been changing jobs every 3 months, that's going to be a red flag for the bank. We would want to know why. Why have you been changing jobs every 3 months? Why there is no stability? Because remember, the bank is giving you money to buy a house, but the bank still has a giant mortgage over it. So if you can't pay that loan, it means the bank will then have to, take it off you and sell the house. So they want to make sure you can pay that loan. That's why employment stability is very, very important. I help a lot of self-employed people buy a house. Again, with self-employment, we have to show how the current economic conditions will affect your life. So if you were a plumber before working for a big company and then gone on your own, we need to understand that you can sustain your expenses, that you understand how to run a business. Okay, that's character, super important. Capacity. So this is your ability to repay the loan based on income and existing commitments. So we'll look at your capacity to pay off debt. We say, okay, if Mr. and Mrs. Smith, you want to borrow 500,000, can you afford to do that, basically? Okay, this is capacity. Now, capital. This is your deposit in simple words. So we'll look at how much deposit do you have? What are your savings? Do you have KiwiSaver? Do you have other investments? Do you have investments overseas? So we'll look at all of that and we present it to the bank. Then the bank also considers conditions. So this is economic factors, interest rates, as I just mentioned to you in the beginning, OCR, super, super important for the bank, because what happens is, let's say COVID was very relaxed, bank opened up, everyone was getting money like hotcakes. Now things have toughened up, oil crisis, the bank has lifted their conditions, and therefore it's much harder for people to get a mortgage. So conditions can always change as well. And then collateral is what we've discussed before. Is it a standalone house? Is it an apartment? Is it townhouse? Is it a new build? What are you actually offering for the bank as a property that you buy? I hope this has been useful, but this is the 5 C's that any bank will be looking at. And this is what the bankers are trained on to assess your application. So if you understand all these things, you can prepare yourself and to be in a much better position than anyone else. Right. Once we looked into that, what happens with the pre-approval? This is the exciting part for me, because this is where I get involved quite heavily with my clients. So in most cases, we can push for pre-approval, even with, as I said to you before, as little as 5% deposit, as little as 10% deposit. A lot of your friends may believe you need 20. You do not. We can get you in with 5% deposit. Okay, so just keep that in mind. Now, what we usually do is we have a meeting, I understand your goals, and then we get your documents. Once I collect all your documents, I write my notes, and then we submit it to the bank for the approval, because I will be able to assess how much you can borrow, and I will be able to tell you that as well. And then once we get a formal pre-approval from the bank, you have 3 months to buy something. After 3 months, if you have not bought anything, we can roll it over again for another 3 months. So in total, you should be able to buy something within 6 months of the pre-approval. Now, very, very important. If something changed in your situation, then the bank can withdraw that pre-approval of you. So if you lost a job or had a baby, deposit changed, whatever happened, the bank will find out, the bank will take away that pre-approval of you. So the pre-approval is always based on your situation at the time of the application. And if anything negative happens, the bank can take it away. So be very careful. But I mean, as well, at the same time, you don't want to put yourself in a position where you're borrowing money for something that you cannot afford. That will be very irresponsible. I hope so far you guys are with me, and I hope it's all been useful. Okay, good. Now, when we're looking to buy a house, let's say you've got your pre-approval, let's look at some properties. Usually, mortgage advisors are not there to look for properties for you. This is your job. In New Zealand, we don't really have buyer's agents, but if you contact an agency and if you've developed a relationship with someone, they might show you other properties because they might be able to sell other agents' properties. So make those connections, research your area, research, Trade Me, real estate websites, homes.co.nz. There's a lot of places you can go to. One thing I really recommend my clients to do is to go to as many open homes as possible. Because when you do that, you will start getting the feel for what do you like and what you do not like. And it will create a bit of a checklist, which I also have as part of my guide. So if you do need that checklist, let me know. We can send this to you. As part of the checklist, you can go, okay, what's our non-negotiables? What our must-haves? And it's okay, we can live with that or we can't live with that. For me, when I was buying my first home, I needed a really good kitchen and I needed a good bathroom. That was super important to me because I love cooking, and bathroom is my safe place where I go to relax after very stressful days, right? So to take a shower and all. So for me, it was very, very important. I didn't care much about the backyard because I'm not a garden person. So when we bought our first home, it was 69 square meters. It was tiny. It was 3 bedroom. It had a good kitchen. It was a tiny kitchen, but it was a good kitchen, and it had a good bathroom. So for me, that house ticked the boxes that I needed, and it had a fireplace. For me, also as part of the condition was I wanted a fireplace. So that was really cool. Now, the other thing to look forward to as well when you searching for properties is if you've got kids or if they're still little, you need to think about the future, right? Where's the school? Where's the hospital? Where are the doctors? Where are the shops? You've got to think about these things. You don't want to spend a lot of money buying a house and then realizing you're out of zone. You're not in the right zone and you have to move again, or your kid will go to the school you don't want them to. So all these things do matter, and take your time looking into the properties. Okay, you've seen a house you like. How are you going to make an offer? Usually we say to the clients, you can get the agent to help you and then get the lawyer to overlook into it, because a lot of lawyers charge you per hour and they might charge you, $400 plus GST to look at the contract. So you don't want to spend too much money up front. You want to try to make an offer, and we can help you with that as well, as long as you make an offer subject to finance or subject to something. We can get you out of it. So finance is a big one. So it means that you made an offer, you haven't bought it yet, and then your time starts then. So we have 10 days, for instance, to tick off the finance. It means we have to go to the bank and get a formal approval and then come back to you. If the bank doesn't like the property, you will have to pull out from that property. So it means you cannot proceed with that. And this is where it's super, super important to have a really good team with you, advisors that respond really fast, and lawyers that work on your side. And then, because remember, the agent that's selling, he's working for the people that he's selling for. He's not working for you. He might act like your best friend, and nothing against the agents. I have some amazing good friends that are agents, but at the end of the day, they're working for the seller. Okay, so very, very important. And this place is when you're making an offer, have people look over it. The agent, your advisor, your lawyer. Cool. And when we say make an offer, a lot of time people ask me, what does it mean, make an offer? Sales and purchase agreement. That's how you make an offer. So sales and purchase agreement, usually created by the lawyers or the agents, can give it to you. This is where you'll put your names. This is where you put the price. Once it's presented to the vendors, they may cross that price and they might want something more. And then it will come back to you. And then you have to cross it out again and put your own price. So this is how you negotiate a little bit. So sales and purchase agreement is how you make an offer in New Zealand. Now, once that's all done, there will be a title transfer, and this is usually done by lawyers. So when you bought a house, they will transfer the title of the house from the previous people to you. This is how you know you've bought the house and you're the right owner. Usually the lawyers will check all of that, but again, super important to pay attention. Give you an example from my own experience. When we were buying our second home, we went to sign the loan documents, and the loan documents had completely wrong address. It had Otaki instead of Palmerston North. Same street name, just different towns. So very, very important in New Zealand. There is a lot of streets that may have similar names. And there was just a banking mistake. Someone just clicked the wrong box. But super, super important to check those things as well yourself, because you don't want to accidentally buy someone else's house. Cool. Moving on, and save your questions for me. I'll come back to them, I promise. Now, finance conditions and due diligence. This is what I was just talking about before, is that when you put a condition, why does it matter? Because they're protected, you get protected by those conditions, okay? And the bank is protected as well. So if there are any issues, especially like if you've done a builder's report and the builder's report identified that the house may have big moisture readings, the house is leaking and you didn't know that, the roof is bad, or the under the house is really bad, because you can't see those things, you can pull out from the property. Okay, so that's why the conditions are super, super important. And you can put as many conditions as you like, but at the same time, if you put way too many, you don't want to shoot yourself in the foot where the buyer doesn't want to, sorry, the vendor doesn't want to sell it to you because there's way too many conditions. Okay, so just there should be a balance. Here are some of the examples of the conditions that buyers can put. So finance condition, builder's report, engineering report for those in Christchurch, super important, LIM report. Now, I saw a post on Kiwi First Home Buyers page. Someone said, the agent provided me with the LIM report. Do I really have to get my own and pay money? Yes, if you're going to use that condition to get out, or if you've got any future claims. You cannot use the LIM report provided by the agent to make any future claims. Okay, if you didn't pay for it, it's not going to have a leg to stand on if you've got any disputes. Title can be a condition, registered valuation condition, and insurance. Registered valuation, we'll just pause here for a moment. Remember, if you do not have 20% deposit, the bank will always require registered valuation. Always. I say this to my clients every single time, and every single time they forget. And then they put an offer, and then they come to me and I say, we need to get registered valuation. And they go, what? So, registered valuation, super, super important if you don't have 20% deposit. If you have 20% deposit, usually the bank doesn't need registered valuation. Unless you're buying a very specific property for a very strange price, the bank may require registered valuation. Now, you need to put aside about $1,000 for that. 1,000 to 1,500, depends on urgency. And for lawyers, you probably want to allocate about $2,500. And for builder's report, you want to probably allocate between 500 to 1,000. And for LIM as well. So I would suggest put aside $5,000 in total for any of these conditions that you will need to tick off. But we don't spend any money until your property is approved by the bank. Okay? When your offer is accepted and the bank has approved the property, only then we go and start spending money on those things. I do not let my clients spend money beforehand. Cool. Hopefully you guys got that one. Now let's look at the titles in New Zealand. So freehold. As I mentioned to you in the beginning, we had a standalone home. Usually there will be freehold. Okay, that means that you're in charge of that property. No one can tell you what to do. Then you've got cross leases, which is the next one that's very common in New Zealand. This is where you might find two townhouses next to each other, and they might be on a cross lease. So you have to get each other's permission if you want to do something to the property. Then you've got the leasehold. Stay away from the leaseholds, please. Leaseholds and company shares, these are the two that we do not like in New Zealand. The banks don't like them. Very hard to get lending on them. Yeah, not fun. And then unit titles is usually apartments. So again, we can deal with that. But if I was to tell you to buy something today, freehold will be your priority. And then if not, then cross lease is okay. Okay, but stay away from leasehold and company share. Again, usually advisors wouldn't share this sort of information up front with buyers. I've been to many first home buyers webinars. I don't think I've seen this shared before. So please save this information somewhere so you're aware. Beautiful. Now, with the registered valuation, we're just going to come back to it for a moment, what happens and how we do it. We have to order it through an independent assessment, okay? And that gets ordered online. You get a link, you pay for it, and then the person is assigned to that property, and they go and look at that property. And then they give you a report back. How much do they think the property is worth? So if the property is worth, if you're buying it for 600K and the valuation came back at 595, it's okay. It actually gives you an ability to negotiate the price down by maybe $5,000. Maybe they'll drop it for you. But if the valuation came back at 500, then we've got a big problem. There's a 100K difference there, and the bank will have questions for you. So usually you'll have two options at that point: either pull out from the property based on valuation, or come up with more deposit, because the bank will not lend more than 500K for that property. The bank will cap it. And if we're looking at going unconditional, so this is fun part. So you've put an offer, you've ticked off all the conditions, we got you approved, registered valuation was all good. Now you're going unconditional. So going unconditional means you bought the house. This is it. There is no way back. And trust me, if you try to go back, you lose your deposit. So on the sales and purchase agreement, usually people put deposit down, like $10,000 or $20,000 or $30,000. It's part of your bigger deposit for the bank. The moment you go unconditional, you have to put down that deposit. And if you put down the deposit and if you want to back out of the property, you can't. This is it. You have to buy it. But there was a case one time, I had a couple and they had a big fight and they separated right as they went unconditional. They tried to get out of it. Luckily, the vendor let them off the hook, but he didn't refund the deposit. But there was also another couple that actually got sued by the vendor because the vendor lost money on their deal and he took them to court and they had to pay the difference on how much money he lost if he sold it to them versus when the market crashed and he sold it to someone else. So very, very important before you go unconditional to check everything that this is the house you're going to buy and your lawyer has okayed it. Because once you go unconditional, it's like a buy now button on TradeMe. There is no way back. Now, let's look into the common challenges and helpful tips. As I mentioned before, pre-approval puts you in a much better position, right? So if you looking to buy a house, you don't know what yet, get a pre-approval. It will last for 6 months. It doesn't cost us anything to do it. Doesn't cost you, doesn't cost me, doesn't cost the bank. Nobody's going to charge you anything apart from my time and your time. Put a pre-approval in place because then you are one step ahead other buyers that don't have a pre-approval, because the banks can take up to 2 weeks to give you that approval when you find a property, you know. So but if you have a pre-approval, you can get in within 2 days, 3 days, much faster. So the other thing I often discuss with my clients is if you can't find something in your price range in that location, can you change the location just even tiny bit? Because sometimes if you look at different places, you may find something within your budget. So very important, have a look at that. Estate agents and mortgage brokers can help you to get some properties fast and some properties off the market. Because a lot of agents get listings that may not come to the market, or people that want to sell, but they don't want to advertise in the open market. So building that relationship with the agents, super important. And let's talk about settlement. So you've gone unconditional, you know you're going to be settling soon, and usually settlement is about 3 weeks after you've gone unconditional. This allows time for us to prepare your loan documents, to prepare things like insurance, you moving out of your rental. So when people want to settle super fast, it's usually not a good idea. So try to settle at least 2 to 3 weeks after going unconditional. And these dates you usually put on sales and purchase agreement. And again, I talk my clients through that. So don't worry about it too much right now, but just have that in the back of your head for the future. So for the settlement, you need to make sure that your deposit is ready and transferred to the lawyer, because your lawyer will receive all the money on the day. They will receive money from the bank and they will receive your money and they will pass it on to the other lawyer who you're buying it from. And that's why it's super important that your money is available. They're not going to wait for you if your money is stuck somewhere. And if you don't settle on that day, again, there will be penalties, there will be high fees, etc. So make sure that you are settling on the day that you said you will. Okay, you cannot take a delay for 1 day. Now, in terms of preparation for settlement, when I mentioned loan documents that will go to your lawyer, we prepare the handover, the structure of that loan. So usually I sit down with my clients. The moment they go unconditional, we sit down, we talk about the loan structure. And that goes to the bank. The bank prepares loan documents. Loan documents go to your lawyer to sign. So super important to meet your advisor or banker as soon as possible, as soon as you've gone unconditional. Because the rates change all the time. You don't want to miss out on good rates, especially right now when the rate's going up. Now, this is where it trips people up a little bit in New Zealand. House insurance. It's a must. You must have house insurance in New Zealand if you've got a mortgage. Okay. And you have to ask your insurance provider for a certificate of currency. And that has to have a bank listed on it. So let's say you got a mortgage with ANZ. The certificate will say interested party ANZ Bank Limited. Because what happens is if the house burns down and you got a payout of 600K, you're not going to get all that money straight away. The bank will have to take some of that money to pay off your mortgage, and then you can keep the rest. So that's why it's super important for the bank that the insurance has them listed. Because if they're not listed, they're not going to get the payout. And then you're going to end up with lots of money and a big mortgage and no house. Now, life insurance. In some circumstances, it may be requested. However, it's not compulsory in 99% of the times. So if you want to save money in the beginning and you don't want to take life insurance, that's okay. But I do recommend my clients get life insurance. So within my team, we actually do house insurance and we do life insurance as well. So we can help you with that, but it's not a must. So just keep that in mind as well. If you're ever talking to anyone and they're forcing you to get life insurance, it's not a must. In terms of pre-settlement inspection, I've seen a lot of people that want to skip that. Please do not skip pre-settlement inspection. This is when, before you buy a house, you go in and you look at the house with the agent and make sure everything works. Make sure that things are there. Make sure that if the vendor said they're going to leave behind an oven, the oven is there. If the TV is there. That the garage remote is there. The garage is working. You know, the keys to the doors are working. The electricity, flushing toilets, etc., etc. Gas, super important. I had clients before where they moved into the property and the gas wasn't working. And yeah, so very, very important to check all of those things, because otherwise it's going to cost you money. Once you settle, you can't go back to them for anything. And the settlement date, this is what I was talking about, the transfer of the funds and then transfer of the ownership to you. And this is where you get the keys. Okay, so this is where you can get the keys, pop the bubbles, and you've done it. Now, one thing that people forget to do, when you buy a house, it's important to realign your budget and have a look really, what are your mortgage repayments? What are your maintenance? What is your insurances and stuff? Because having a house, it's not like being in the rental. You can't just call your landlord to come and fix it for you or your parents if you're still living at home. So super, super important to prepare for those things and have a cushion. So don't drain all your savings towards the house. Leave a little bit of a cushion to make sure that if something crops up, if a water tank blows up, you know, whatever happens, you've got the money there for you. And as I said to you before, in terms of insurance, you've got to look into that. But also one thing I do mention to my clients is that your first home may not be your forever home. So keeping the regular maintenance will preserve the property value. And in the future, let's say 2 years time, 3 years time, you want to come back to me and we want to buy another house, we can use this house as a stepping stone for your next house. So it's super, super important to look after your home. Don't just move in and just let it go. Look after it, because in 2, 3, 5 years time, you may want to sell it, or you may want to use it as an investment property and move on to the next house. So we can do that. I've just mentioned that before. So building your home equity, planning renovations, and then refinancing. So usually after every refix, 1 year, 2 years, 3 year mark, I like to sit down with my clients and we'll look at your financial goals. We'll look at where are you heading? Are you actually enjoying that house, or you want to change location? So we can look into all of that as well. So your journey with your advisor never stops at the first home. Often you continue dealing with them. I have clients that I've been dealing with for the last 15 years of my life in the financial industry. I'm dealing with their children now. It's crazy. So if you find the right people to deal with, you have an ongoing relationship, because the bank stuff come and go. but your advisor will stay by your side and will help you to achieve things. I have clients that came to me and they didn't know that they can buy their first property. When we made it happen, she said to me, I want to buy an investment property. I said, okay, that's fine. Come back to me in 2 years' time. We became friends over this time, and she came back 2 years later. She bought her next property. And then we were sitting one night and she said to me, do you think I can buy another one? I said, absolutely, you can. So within 4 years of me knowing them, they have bought 3 properties now. So that's what I mean is if you have the right person by your side that can guide you, it becomes more of a relationship. It's not a transactional relationship anymore. We're not chasing the best rates here. We're actually setting up your financial future. So on that note, I'm going to wrap it up and we're going to open up the floor for questions and answers. And for those that don't know, I actually also have a podcast. It's called That Home Loan Hub. You can find me on Spotify, YouTube, or Apple. And often we share, it's bite-sized episodes. It's not 3 hours long. Sometimes they're 7 minutes, sometimes they're 10 minutes. We share about what the economy is doing, what we're seeing out there. I interview really cool people. So I interview builders, inspections, valuers, real estate agents, all sorts of people. So for me, I feel like knowledge is power. The more you learn, the more you can expand your brain and your knowledge. So if you want, please tune in. I would really appreciate that. But also, might be something new that you discover. But as I said, if you want to know more about me, you can go on zibunisa.com. Now, I do have a team behind me as well. I can't do it all on my own. So if you do decide to work with me, potentially you will be working with one of my staff members, but I always oversee every single case. And I always know every single client. It scares my staff though, because they're like, how do you remember them all? I do remember. I have a big capacity for memories. But if you ask me what's my child's favorite color, I have no idea. Sounds bad, but I remember every single deal. It's crazy how the brain works sometimes. So yeah, so for those that want to tune in, feel free to follow me. And if you've got any questions, let's open up the floor. And yeah, I hope that was useful. Was that useful, guys? And I hope it didn't take too long. Thank you for the love hearts. That's nice. I feel like I've been talking to myself for the last 45 minutes. Um, thank you. If anyone wants to ask me a question live, you can ask me a question live. Sounds like someone unmuted. Marcus?
Just a flat.
That's all I can afford.
I can only afford that too.
Hello, Marcus.
Okay. This guy.
No,
Fuck you.
we're just gonna mute Marcus. I don't know who is he talking to, whether he's talking to me or not. But there is a question. I'll just read it out. Why does life insurance matter in some cases? Good question. I had clients that were in the late 50s to 60s, and they were getting a loan with a second-tier mortgage provider. So for them, the mortgage provider was taking a huge risk on clients, and they said as part of the condition they want these clients to have life insurance, because if something happens to one of them, they want to make sure the mortgage is paid off. But normally, if you're in your young 20s, 30s, 40s, and you've got good job, you've got good income, then usually they will not require you to have life insurance. So it's very, very situational based. Hope that was useful. Cool. Thank you. Thank you, Alexandra. What is a second-tier lender? Really good question. Thank you so much, Rebecca. So second-tier lender is non-bank. So in New Zealand, we have main banks. Some of you may know ANZ, BNZ, Kiwibank, Westpac, ASB. So they're called main bank lenders. Now, there are smaller guys as well, like Cooperative Bank, SBS, and then there are non-bank, Liberty, Avanti. Usually they're the ones that may take higher risk clients, but at the same time, they may put higher interest rates on that to allow for that risk. Hope that was useful. Just found my screen. Didn't even see myself all this time. I hope you guys have. I've got earrings, but it looks like I have no earrings at all. Hold on, let me unblur. Guys should have told me. There we go. Now you can see my messy whiteboard behind me. So in terms of your other question, could I please send presentation checklist? Yes, absolutely. If you flick me an email after the presentation, we can send you the guide and the checklists. And they should be, yep, absolutely, Alessandra. I have few of them. And recently I was actually visiting through, and one of my clients that bought a house in Christchurch, I passed by and I stopped over and I said hello. It's really nice to see the house that they bought. Because often we don't really see the houses, we only see them on beautiful pictures that you guys send us. So it was really, really cool to stop by and say hello to him. So yes, absolutely. The answer is yes. So yeah, feel free to get in touch with me, guys. I hope you got my email addresses in your mailboxes. You would have got reminders for this. So yeah. Artyom, Sana, you've raised your hand. How can I help?
Hello. So we were wondering, if you're buying a new house that has some warranty on it, do we still have to do all those evaluations and all the set of documents you mentioned?
Really good question. I would say yes, especially if you're buying in Auckland. Super, super important to do your due diligence. I had clients in the past that got burned. They didn't do their due diligence properly, and they got burned quite badly, even on a new build. So super, super important to get that right.
Thank you.
Money gift from parents without the expectation to pay back. Do you need lawyer involved? And when in the home buying process is this done? Really good question. Thank you, Nev. So if it's a money gift, we just need gift certificate. You don't need to get your lawyer involved unless there are other siblings that might have some sort of claim in the future. We can't predict that. But if they've signed a gift certificate, it should be fine. And we do this at the pre-approval stage. So we don't need to see the money in their bank account. All we need is just the gift certificate. And we usually have templates for that from each lender. But if it's money that they gifting you, but it's not a gift, we need to know about that as well. And the lenders are usually okay with that if it's a deed of debt. And that's only repayable if you separate or if you sell the house or if something happens. If there are no repayments for it, that's okay as well. It's really good to be upfront, because the last thing we want is to put you in a position where, let's say you've separated from your partner and your parents gifted you that money, but they gifted you as a couple. They didn't want to gift it to you if you separated. They don't want the other party to get it, right? And they want that money back. Then it puts them in a position where they can't get that money back if they've signed the gift certificate. So if you think that that might happen, then deed of debt is much better to sign. And again, us and your lawyers, we can talk you through it. As I said before, I've been in the industry for 15 years. I've seen it all, and I'm here to guide you. I like to put my clients in the best possible position to protect them from the worst possible scenarios. Have you worked with a case of young couple buying a larger property to live in with their parents? Yep, absolutely. How would the mortgage work with 4 people? Really good question. Yep, absolutely done it. We just have to show to the bank that people can afford that mortgage. So I'm dealing with one now where 5 years ago, the couple bought into the parents' property. So 4 of them own the property. And now this couple is buying out the parents. So now the parents are coming out and the couple is going to own the property on their own. What we had to do is we had to show that all 4 of them can afford it. Because if something happens to the young couple, the parents are still responsible for that mortgage. And then often there is a way to make it work. We just need to understand the full situation there. If someone is on their own but can't afford to purchase a home on their own, can someone else contribute and buy it with them? If someone is on their own, and can someone contribute to buy it with them? I guess the question is a friend jumping in to help to buy them. Yep, there's heaps of friends that are buying together. Again, we have to make sure that we're not putting anyone in a pressured situation, that if the other person decides not to contribute anymore and they leave or they lose their job or something happens. So this is where it's super, super important to work with an advisor that understands the full picture and your goals. What do you want to achieve? Where are you going with that? If it's just a short-term step and then you're going somewhere else, cool. But we need to know all these things. And we can't help you if you only tell us half of the picture. And this is where having an advisor independent from the bank is really, really helpful, because we work for you. You tell us, like priests, therapists, you tell us everything. We choose and present it in a way that the bank will accept, because we understand how the banks works. As I've shown you before, the lenders criteria, this is just a snippet of what we have to deal with. So we show the bank and package it in the best possible way. We advocate for you. Sorry, my computer was just switching itself off. You guys did well. My goodness, it's been almost an hour. I didn't even realize how fast the time gone. Hope you're not sick of my voice. Well, if you're going to be listening to my podcast, you're not going to be too sick of my voice, I hope. Cool. Now, I also have a YouTube channel as well. So usually I put some stuff in there. I have Facebook and Instagram, and I try to be as present as possible. So please, please, please reach out to me if you do have any more questions. I'm going to allow for one more question tonight, and then we're going to wrap it up. You guys did really well. No one brave? Okay. We're going to wrap it up. So for those that want the booklet, please reach out to us. We will send it to you. For those that stayed for the whole hour, really appreciate the turnout. Thank you so much. And